Coming up on today's episode.
Getting to the end of it, she moved in like absolutely stoked.
No,
like awesome. so happy. And you're like, that's why you do it, and like that's why I love what I do. When you get that end result and someone's just over the moon, it's a great feeling.
Dodgy advice and bad decisions can cost you big in real estate. We're here to make sure that doesn't happen. Welcome to the No BS Real Estate Podcast. I'm your host, Joe Agresta, and it's time to take control of your property journey together.
Hi, I'm Jacob Thorne from Port Finance Group. Today I'm on the No BS Podcast. If you come this way, we're talking about all things first home buyers. So listen up, we look forward to it.
Welcome back, everyone, to the No BS Real Estate Podcast, your listening how-to guide to the Aussie finance and real estate market. I'm your host, Joe Agresta. Now, here's the truth. Most first-home buyers aren't locked out of the market because they're broke. It's because they're scared. Scared to be honest about their money, scared to make a mistake, and scared to pull the trigger even when they're ready. So, they wait. And while they wait, the market keeps moving without them. Today's episode is called Why You're Still Renting When You Could Have Bought Last Year. Joining me today is Jacob Thorne from Port Finance Group, a no BS broker who's built a reputation for giving buyers straight answers and real plans. He helps first home buyers get clear on their finances, build a roadmap, and actually buy when the timing is right, not just when you feel ready. So we're unpacking the confidence crisis keeping Aussies on the sidelines, the hidden costs that trip people up, and how being upfront with your broker can fast track your way into the market. So Jacob, welcome to the show.
Thanks for having me, Joe.
I'm very keen. Oh, I'm so glad because last week I was talking to you about this episode and I was like, the questions, you're like, yeah, look, all good. But when I met you and when I started looking at your social content, I'm like, this is our brand, no BS. You just tell it like it is. You tell it straight and you're not afraid to hurt people's feelings, but it's all with the right intention.
I've done that a few times, don't you worry. So I probably will fit in well.
Oh, 100%, because like I've always said on this show, we started it because we wanted no bullshit, right? It's sometimes the buying game can be filled with fluff and dream houses and lovely stories and all the positives, but no one's really addressing the serious and the negative stuff that happens and then trying to face it head on and without the bullshit and the fluff to go, oh, it's okay, you can try again next year. It's like, yeah, and you're 100K out of budget.
Yeah.
So that's why I was excited to have you on because you fit the brand so well. I know that our listeners today, you might get a little butthurt, but I don't think in a bad way. I think you need to hear this. So anyone that's tuning in, that you're feeling a little bit hurt, it's probably because it's the truth. So we're going to...
You can handle the truth.
You can handle the truth because you're going through this journey. You've probably had a few offers knocked back. You've probably been told to save more. You've probably been told that you've saved too much and just buy something before the market outprices you. So this episode's for you. Let's get into the hard-hitting truths. But like all good stories, we need to start at the beginning. So, Jacob, what got you into finance and how did you end up with Port Finance Group?
Yeah, it's an interesting story. So it was probably 10 or so years ago. I was working in a similar industry in insurance for a big, large company here in Victoria. And one of my friends who was in the banking industry at the time had a role that was coming up and he sort of said, look, I think you'll be great for this. You've got X, Y, Z. You don't talk any bullshit, so you might be perfectly suited to it. And so that's where it all really started, to be honest. Went for that role, got it. That was in the banking industry. I was working for the banks for sort of 5 or 6 years at two different banks in Australia. And then about 3 years ago, I was up in Port Douglas and similarly another friend introduced me to a new friend at the time who was a broker, and we sort of got talking and spitballing about what the future might hold and what I wanted to do and why I wanted to become a broker. And sort of a few Chardonnays later made the decision to go out, become self-employed and obviously join Port Finance Group at that time. So, yeah, that was a number of years ago now and here we are.
I love it. I think you got a lot of good mates, obviously.
Yeah, I do, yeah.
And I was going to say insurance is interesting because I'm also from the insurance industry, so I wonder if we've swam in the same pools.
Maybe.
Yeah, 100%, because I feel like insurance gives you so much compliance training and it's overkill.
And you need that for the banking world these days, that's for sure.
Oh, 100%. So the fact that you've got I have a different kind of level of respect for that because you've come from from an industry that is very, very heavily regulated and it's, totally complianced up to the friggin' shithouse. So you know that if you're going into banking or you're going into brokering, it's similar with compliance, but you've got an extra grade of understanding.
Yeah, exactly. And we're sort of working with universities as well as within the insurance space. And so the compliance side of things was massive. And, listeners may or may not know, but the banking world now has so much compliance. And as brokers, we have what's called best interest duty for the client. So we have to work within their best interest duty, and behind that has a lot of complexity and regulation behind it. So it was a good grounding, and particularly my banking roles previous to becoming a broker as well, because I looked after brokers. They were my clients. I was a BDM. I would know 1,000 brokers at least in the country. And so that sort of gave me a good understanding as to what it would be like, obviously, going into business as a broker.
And you got then, if they're your clients, you would have seen the whole broking space from a very different angle that a lot of new brokers don't get to see. Because it's not often that a broker typically comes in from a BDM type of position. They're usually coming because they've been a bank teller or a bank broker, and then they're moving into their own practice, which is fine. But you've seen it from, okay, I know what 1,000 other brokers, what their pain points are, where it's frustrating, where it's good, where it's bad, where it's ugly. I know how I'm going to handle my own stuff now.
So exactly.
How good's that?
Yeah, well, you see it, as you say, from a completely different light, and you see it from the bank's perspective, so that when we now lodge a deal for a client, you're understanding what's actually happening in the background, so it helps you to navigate getting from a submission to an approval, and then obviously through to a settlement as soon as possible.
Yeah, that's true. I didn't even think of it from that way,
And that's probably the key part, and the key advantage of it is literally that, understanding how it all works in the background, understanding who my business development manager is and what they're talking to at credit in the back office, and how that's all navigating through. And then obviously, having a lot of connections and strong friendships within the banking industry obviously helps to, when a favour's needed to get a settlement done really quickly, I can call upon it.
And this is what I always talk about on this show, is like the power in connections that your professional has. Like, don't discount it, because often, like as an advocate myself, I've got brokers that I work with that I know on weekends where I've been, wanting to put in an offer, but I've needed to speak to their broker who's typically not working on a Saturday, Sunday. I've got contacts that I know who they'll just pick up the phone and go, what do you need me to do? And I'm like, just lodge this, do this, and tell me straight away if they can afford it or not. And they'll get on and do it. So it's often the power of connections within that professional that you're dealing with.
100%. And like the old adage, it's not what you know, it's who you know.
Spot on.
It rings true. And if you listen to my story about how I got into banking and finance and now broking, it's the same thing. It's from people that I knew, and that still holds strong today, regardless of everything that's going on. And obviously the AI and the social media, all of that is happening, but the reality is it's still down to relationships and connections, which are really important.
Exactly. Like I always talk about, like everyone asks me, because I'm in the AI prop tech space, I always get asked, are you trying to replace buyer's agency, trying to replace this job? And I'm like, listen, my job's not to replace anyone, because that's my fallback if this goes belly up, right? I don't want to have no job when I go back, but I do want a job that's efficient, and I want to be able to use technology to make my time so friggin' efficient that all I'm doing is the relationship work, which is what I love doing, because as you know, this whole game is not, they say it's about property or about money, but really it's about people. 100%. People first. So,
and it's the same thing with us now with AI, like it's speeding up how quickly we can get things done, and it's not going to replace the human element to it. That's going to become even more important, I believe, over the next 5-10 years.
Correct.
But the AI and the technology is going to help you to get to where you want to get to quicker, ultimately.
Exactly. So I couldn't agree more. And like you said, you've been in the game for like basically more than a decade. What do you think has changed most about first-time buyers in that time?
Yeah, well, just the opportunity and the amount of different options they have to get a loan to make a purchase for a property. It's just gone through the roof over the last 10 or 15 years. If you look now, you've got the government guarantee scheme. So if you're a first home buyer, you can get in with a 5% deposit basically plus costs. There's LMI waivers depending on your industry. You might be a first responder, an accountant, a lawyer, a nurse, someone like that. You can get in with less of a deposit. And then the other side to that is the education. There's so much education out there available to the first home buyer, so they can go and grab that and run with it and obviously make a buy.
And it's true. Like I didn't even think about it from the loan types, because 10, 15 years ago, what were we seeing? I think it was just like the first home buyer grant or the first home builder grant, like, either one. And that was it. And it was like if you happened to be with a partner that had already bought a house and you wanted to be both on title, you couldn't use it.
Yeah, you're done.
It's like you have to pick either you just put it in their name, which a lot of people don't want, and then you miss out. So now the government's really made it more accessible, but in doing that, it always drives market so high in the property space.
Yeah, for sure. And I think that's why we're seeing that market, the first home buyer market, run really, really hot at the minute because of this scheme that obviously got adjusted at the start of October without any income cap. So that's opened it up to many more people. There's now no longer a cap on how many people will take it up. The property price caps have increased as well. So it's just pumping along, and that market, as you say, is really busy at the minute. And I think, I tend to agree, without this being financial advice, that the reality is it's going to push the market up over the next sort of 6, 12, 18 months. Yeah,
and it will, right? Because you're putting demand into the market straight away. Overnight, people who maybe have been, and you've probably got clients like this that you've had on your books for maybe 12 months who wanted to save a little more, or maybe they weren't quite ready to buy. Overnight, it's just like, cool, you can buy.
I can, yeah. Yeah, exactly.
Oh, shit. So that buy that was going to come to the market probably in January is now coming to the market 6 months earlier or, 4 months earlier.
Yeah.
It's a big push.
Yeah, yeah. Oh, everyone's bringing things forward. And they're probably going, I can see what's going to happen next year. This place that's worth 700 is going to be worth 800. So how do we get ahead of the game? We mightn't quite be ready right now, but let's try and do it.
It's that thing, right? It's and I'm going to get into this with you in this episode today, where we're going to talk about that buyer mentality of waiting and not waiting and putting off being ready. Because I feel like a lot of it is more mental than it is on paper you're ready. And I'm interested to get into that because your clients describe you as no fluff, just facts. And has that always been your style, just to kind of go be direct and upfront and give you the no bullshit response?
Pretty much.
You're like, I'm going to be blunt with you, pretty much.
I mean, if you ask all my friends and family and people that know me personally, then they would say pretty much exactly that, straight down the line, no fluff, no bullshit, I guess would be one of the descriptions that people use me. So, that hasn't really changed. And I think now in the space that I am obviously working in, there's a lot of benefit to that. Say you are doing a loan for a first home buyer, you've got to be chameleonic in terms of your approach and understanding how they are and then, adjusting the way that you are. But at the end of the day, they want you to guide them. And sometimes that does mean, no, you need to do this or you need to do this before you do that so that you can get the outcome that you want and actually show some sort of straight down the line direction, basically.
And I think a lot of the time, maybe initially, and this is just common human element, right? I think a lot of people get shocked when they first hear someone go, listen, it's not what you're doing now is not going to work.
Yeah.
This is what you need to do. It's always that first shock. But I'd imagine that your clients, after that initial slap in the face, metaphorically, of course, speaking, that they go, oh, actually, hang on, let me listen. And then they come back and thank you after all of that.
Yeah. I mean, I think that's part of it. Sometimes you do have to say no.
Yeah.
Like if you've got to say, no, you can't do it now, or you can do it, but it's 6 months away or it's 3 months away. And as you say, this is what you need to do and give guidance and direction. It's probably not a case of them coming back, 3 or 4 months later and saying, oh, thanks for the slap around the chops, basically. But it's definitely thanks for your guidance and help. And we didn't know we could do this or we didn't know that we could do that. And now our minds have been opened up. I've just done a loan recently for some clients that are overseas and they're self-employed. And on paper, that's really, really hard to do, short-term self-employed as well. And so it was, we can't do it right now, but here's some sort of direction over the next few months to get everything in order, get the accountant on board in terms of the structure, et cetera, to get, obviously, the purchase done down the track.
No, that's awesome. And that's kind of what I was getting to, right? I think people appreciate it in retrospect, even though it's a shock at the start.
Yeah.
But what I always say is a good professional is going to be honest and open with you. And if they can't do that and they're telling you that every idea you have is correct, they're not doing their job. That's my honest opinion, because I've taken a very similar approach, if you haven't noticed, with buyers advocacy. It's the same. I've had to have those tough conversations and go, I know that this is your dream house, in your opinion. It's a bad investment.
Yeah.
It's just terrible. Yeah. But if you really want it, you can do it. But here's what I'm going to show you what's going to happen.
Yeah.
And I'm like, now you take it or leave it, sit with it. And if you're still happy to purchase it, I'll assist. But telling you.
And it mightn't seem like the the nice thing to do, but it's the right thing to do.
It's right morally, and like you said, you're even with brokers, you're bound by a code and compliant to
correct.
it. So you're not just saying it to be for the sake of it. It's like also your job is on the line if you're not giving the right advice and you want to write every loan possible. Like, I'm sure that there are brokers out there that go, cool, I can do any loan, any amount, anytime, anywhere, and just going to push you into that space, and you kind of go,
no, you shouldn't be doing
why are you doing that?
To do that. Yeah,
exactly.
Yeah.
So it's like, this is the difference between good operators and ones that, are they just trying to get ahead?
Yeah.
And are they just trying to push that little bit further for no reason at all?
Yeah.
And it's like just to get a commission from the bank.
Yeah, silly. Yeah. And it's a long-term game at the end of the day. Like in this sort of space, everything does take a long time. You know, from when you first talk to a customer, I've got customers that I've speaking to 18 months ago that still haven't bought.
Wow.
And so that sort of massive lead time does occur. So if you think about it, you know, you're going on a journey with them. It's not about just trying to make a quick buck. It's about building a relationship with them so that hopefully you help them buy their first property, and then maybe an investment property, and then the upgrader, and you sort of go on a 15, 20-year journey. Yeah, correct.
Exactly. And you're looking after them, like all that follow-up. Like, it's not like once you've got the loan that you never hear from your broker again. And if that's the case, don't use them again. They should be following up with you. Yeah. And I guess what's one thing you wish every first home buyer understood before they even started looking at property?
Oh, that's a long list that I have to think of with that. I think that preparation is the key. Most first home buyers probably don't have the foresight to look 6, 12, 18 months ahead to when they will actually buy something. Yeah. You know, there's a scheme called the First Home Super Saver Scheme, which is so good. It's going to effectively, help you save an extra 15 or 20% by putting money into your super, and then you can draw it out when you make your first purchase. But you've got to think about that, 12, 18 months
ahead of
prior
time
for it to be worthwhile. And so it's great when I see clients that have used that. So I guess the main thing is to prepare, but also have the conversation with a broker before you think it's time to do it.
Yeah, makes sense.
Because I've had clients come to me and say, oh, you're not quite ready, when they were ready to go to an auction on the weekend to buy something. And you go, well, it's actually not in order, so you won't get the finance. So there's no point going to the auction. But if you can prepare accordingly, speak to a broker early, at least you'll then have a path to be able to make the purchase. And it might be that, it's all good, we'll set it up now. Or it might be, we need to set up a budget, you need to get a plan so that you can, in 6 months, buy a property.
It makes sense, because this is what I always talk about with, I always say property is the reward for all the prep. Yeah. Don't start with property, but everyone starts with property, right? It's like the decision.
REA, domain, this place looks awesome, but it's $300,000 out of budget.
Correct, and they don't know what budget it is. So it's like, this is where I'm always banging on about it on my socials. I'm like, listen, if you're going to buy a house, don't start with the property. You don't know your budget. You haven't been approved. And then what happens if you go to a broker and they go, hey, you can only afford $600,000 or $500,000, and that probably limits you to these suburbs that are not where you want to buy. Yep. All of a sudden, you've fallen in love with $800,000 homes because you've done some online calculator. You haven't thought of every little dollar and cent. It's not personalised. It's generic. So you've gone, cool, I've done my calculator. That reckons I can afford $900,000. And all of a sudden, when you start seeing houses that are $500,000, your mind already goes to, we're not ready. Yeah. It's like, well, no, but you are. Yeah. You just have to have a bit of flexibility. You can buy now at that price.
The expectation is just different.
Correct.
And often, the online calculators that people use, they're just not accurate.
No.
And they're not the calculators that we use and the banks use to calculate your borrowing capacity. So often they're out by $100,000, $200,000. And that then throws you out as a buyer. You're going, now you're really disappointed.
Correct.
And the big difference is people tend to, if it's an owner-occupied property, try and go over, like as in they're trying to stretch to purchase something they really love, and that it might be the family home for the next 15 years sort of thing. So you don't want to get that wrong, whereby you think, we're buying at 1.5, but no, you're actually buying at 1.1. Completely different ballgame.
Oh, it's totally different. And that brings me to, you work with a lot of home buyers in general on the lower end of the market probably. What misconceptions show up again and again for those guys?
That you need a 20% deposit to buy a property.
Still, people still have that.
Yeah, well, I mean, even 15 years ago, I remember, I guess it was 15, like the Barefoot Investor. If you read some of his stuff, it used to be the guidance around you've got to have a 20% deposit, otherwise you shouldn't be buying a property. Well, that has changed dramatically over the last 10 years, for example. So that's a massive misconception. There's so many different opportunities out there to buy with a 5, 10, 15% deposit that the time that it might take to save an extra 10% versus getting in the market might be the difference of missing out on $100,000 worth of growth.
Shit.
Difference to, an extra 50 grand of a deposit to get into the property. So I think that's probably a big misconception. People either overemphasize what they think that they can buy or don't quite get it right in terms of what they need to put into a property. Or sometimes, as you're sort of talking about doing a lot of first home buying deals at the minute, people can get in with 5% plus costs. And so, I've been doing loans for people with a $30,000, $40,000, $50,000 deposit. That's
so good.
And some people think, oh, that's not enough money to buy a house, but running the numbers to buy their first home, yeah, that can work. So
I was literally talking to one of my friends who's out in Country Vic, so, like the Traralgon, Morwell area.
Yeah.
And I was saying, it's cheaper than rent where you are right now. And she goes, oh, but I don't have the savings. I'm like, you don't have, I said, the house, I said, you can get a unit for under 300,000 right now in Morwell, in Moe, under 300,000, and in some cases a house, and they're not in bad shape, but 5%, what's that, like 12.5 grand?
Yeah.
You're joking. Like you're not even buying a car at that point, like in some cases.
15 grand plus costs. So for $20,000, you're buying a $300,000 apartment.
That's right.
As a first home buyer, gold. And as you say, what you're paying for rent-wise per month will mirror up, if not sometimes even be less than what you pay on the mortgage. So
correct.
When you run those numbers, it almost makes sense at times.
Yeah, because I think over there the median rent per week is $400 a week.
There you go.
And I'm like, no, you're not going to pay that in a mortgage.
Yeah, exactly.
It's a no-brainer. And you own it and there's equity and it'll grow.
Yeah, and no one's kicking you out with a month's notice saying, goodbye, we're selling it, or whatever we're doing, we're moving back in. So having that, as you say, the ownership, but also
it's protection for you.
Yeah, it's protection and it's freedom.
Yeah, exactly. Because then if you keep that for 2-3 years, you're going to have a conversation with the broker when there's enough equity built up and say, oh, have I got any options? The broker might say, yeah, actually you do. Do you want to buy an investment?
Yeah.
It's like, oh, cool, I do. Or do you want to sell it and buy the next upgrade?
Yeah.
So this is what property does and why I try and get it into people's heads. Not so much doing first home buying. I try and call it start a home.
Yeah.
Because the first home buyer, for some reason, I don't know if you find this, comes with the dream home mentality.
Yeah.
So it's like, got to buy that one that's going to last 5 to 10 years.
Yeah.
But it's like, hang on a minute.
It's just not the norm, yeah.
It's not the norm. Like, yes, your parents probably bought their first home like that, right? And they stayed there for 54 years. We're in a different landscape now.
Yeah.
Get your starter home. What's the starter home? You might have to sacrifice living further away. It's cheaper.
Yeah.
It doesn't look like exactly what you want your dream home to look like. Just keep it for 3 years and then move on.
I wonder where that comes from. It's probably going back historically where, two people wouldn't buy a place until they got married and then they'd finally move out of home into
the family home.
Yeah, like something ridiculous, which is just doesn't happen anymore.
No, actually, that's a really good point. I reckon it most definitely probably comes from that because you're right. It's you're moving out of home. You need to buy the family home, and everything happened so fast back then and so young. They were like early 20s, or sometimes teens if they're the women.
Yeah.
Who are getting married, and within the first year of having the first child, like my grandparents were like that. It's like they got married. 9 months later, my mum was born.
Yeah.
And it's like, oh shit, that happened quick.
Yeah.
And they're in the family house. Done.
Yeah.
54 years later,
and
they're there.
It's still there. Yeah. And I have that conversation with clients when you get the loan documents and they come out and they're like, 30 years and like that's a lot of money for 30 years. And I'm like, but you're not going to live in this place for 30 years. That's the reality. And you're not going to have this loan for 30 years. You'll refinance in X amount of years. You might sell it. You might upgrade. So don't look at it in that time frame. Look at it. What's your strategy for the next 2, 3 to 5 years? That's where you need to focus.
Yeah, it's spot on. And that's what I love about your approach, that planning and no pressure approach, right? So let's talk about that confidence gap that you keep seeing, because I know that there are plenty of listeners that are stuck in that nearly ready but still not doing anything zone, or maybe they are ready and not doing anything. So the confidence crisis, let's talk about it. You meet people who are technically ready to buy. So in your opinion, why don't they?
Yeah, there's a couple of different angles to that, like analysis paralysis, where people just can't make the decision to buy something. I think it's different if you're looking for a really specific type of property in a specific suburb and it's not coming up. I understand that. But if you're a first home buyer, generally there's a lot of opportunities out there. You're not buying the dream home as we were talking about. So does this fit, whatever it is, 2-bed in the right suburb, close to transport? If it ticks all those boxes, well, then you should be most of the way there to making that decision. I think the other part is literally just that, confidence. A lot of buyers come to me and you can hear it in their voice that they're not confident about what they're doing. They ask me, Jay, can I afford the repayments on this? And I run them through it. I'm like, this is what it'll be. This is what your current rent is, two and a half grand a month or whatever it is, and you're saving $1,000. So, but your mortgage repayments are only $3,000 per month. So you're actually going to be better off in the long run.
Yeah.
And also month to month. So there's that sort of building of the confidence for them and actually telling them, no, you can do this and it does make sense for you. And then I think the last part is around the lifestyle. People think if they're buying their first property, I'm not going to be able to go to the Metallica gig or go to Europe in June or whatever it is and miss out on avocado on toast and all of that stuff, like the Negronis, whatever your poison is basically. But often it's the opposite to that, because having your own home gives you flexibility, because if you do want to go and work in New York for 6 months, well, you can rent your place out, or you can go and move about, or you can leave it as it is, or whatever it is. So I think it actually gives people more flexibility and lifestyle choice.
And because they're talking to a finance professional, you're literally able to kind of foresee or help them plan that from a budget perspective.
Yeah.
You're like, I wouldn't be recommending you go to this amount if I didn't think from your incomes and lifestyle, because I think part of that, what you do when you're with a broker, and you'll talk to this better than me, but just a recap, is you are laying everything out on the floor, on the table the day you meet them, because you're saying, well, these are all my spending habits, here's all my debt, here's my savings, and here are my income slips, and I'm buying either by myself or with a partner or my parent, whatever it is. You're laying it all out. So the fact that a broker is seeing your entire financial landscape and behaviour, telling you how to correct certain things, shut certain things down like afterpays or zip pays, things like that, they're going to be the best person to give you that opinion and say you can or can't afford it. That's what they're there for.
Yeah. And the other thing that most clients don't know about as well is the buffers that the banks have. So say your interest rate is 5.5%, for example. Most banks will have a 3% buffer on top of that.
Oh, right.
So they're sensitising it at 8.5%. So there's a significant increase for the interest rates that would have to occur before you on paper couldn't afford that. So that's a big part which people don't necessarily understand. They think, I can just afford it. But the reality is, if you can afford it in the bank's eyes, you can definitely afford it.
I think that's a really important tip, that buffer. I don't think a lot of people know that.
No, they don't, and it's significant. And if you look back sort of 5-6 years ago, obviously we had the big flu issue that we had here and everywhere in the world, which we don't talk about.
I like how you call it the big flu. Sounds like a bad movie from the 80s.
Yeah, exactly. But, interest rates were at 2%.
Yeah.
And so people then were buffered up to 5%, for example, and obviously interest rates have gone up, one after the next for a number of years to where they are now, basically.
Yeah.
And so people who got loans at 2% and are now at 5 and a bit %, they're sort of on the upper threshold if nothing else has changed, obviously. Whereas people now who are buying 5% plus a 3% buffer, the likelihood of them going to, 7 or 8% in the next 12, 18, 24 months is
less likely.
Yeah, pretty much zero for if you ask most people. Once again, I don't work for the RBA, so I don't know, but that's the general consensus.
Yeah, and makes sense, right? Because we've got to just keep an eye on inflation, keep an eye on spending, see what happens. And look, they're never going to dramatically touch wood.
Touch wood. Yeah.
I was like, I don't know if there's any bloody wood, but I'm going to find it. But it's I couldn't imagine overnight they're going to say it's now up 5%.
No.
It's like, basis points. No, I don't think that's going to happen like that dramatically. But maybe what we saw over the last 2 years, definitely incremental increases every quarter or whatever, and you can kind of sort of prepare for it or try and plan or talk to your broker while that happens. But that's another episode we'll unpack.
Yeah, sure. Yeah, and I don't think we're going to see, if we do have an increase in the next 12 months, it's not going to be 10 increases
No.
on the back of one another sort of thing. So
Every month, month on month.
I feel like the point being, if you can afford to buy now, I think there's probably more confidence that you'll be able to continue to be able to afford that over the next few years.
And service it.
Correct.
Yeah, makes sense. And, you said it can take months, right, to get someone sometimes financially fit. What does that plan look like when you've got someone in that hot seat?
Yeah, well, it's always better to come prior to, as to wanting to buy. It can be a variety of different things. Firstly, it's just getting an overall picture on, as you said, debt, income, assets, liabilities, etc. It might mean that if you want to purchase to a certain price point, then we need to make some adjustments. Might be reducing the limit on the credit card, or it might be getting rid of that altogether. The zip pay, the afterpay, all of that. The hex debt might come into it. So there's some banks which can sort of quarantine and isolate a hex debt if it's below a certain amount, and a couple of different nuances like that. So getting people ready and prepared for submitting an application is important, and understanding, okay, well, we can't quite do it now, but if you cut this, cut that, do this, we'll be ready to go.
Yeah, spot on. And I think that makes sense, right? So it's like you're just setting them up from that path, from that moment, rather than saying, oh, cool, yeah, you're not ready, just come back when you're ready. It's like, what does that mean?
Yeah, exactly. Yeah, you're saying to be ready, you need to do this.
Yeah.
Or this is where, if you want to purchase for X amount, your deposit needs to be.
And it's all personalised, right? Like I can't imagine that everyone is in the same. It's like a category. No. It's like, geez, this person is really dead set on buying 4-bed, 2-bath, 2-car for their first home. Okay, this is going to be your plan unless you're flexible. If you're not, this is where you're at. Yeah,
correct. Yeah. Sometimes it is providing a reality check around the purchase price. I think most people have an idea where their borrowing capacity sits roughly, but once again, we've got systems and software that we use that will bring up all the banks to show what the borrowing capacity would be for that bank, and that can vary drastically, from say 800,000 down to 400,000, depending on which bank you go to.
Wow.
Because there's all the policy in the background that's built into it around probation or maternity or overtime allowances, how each different bank calculates that, and obviously that then factors into what your overall borrowing capacity is.
Yeah, that makes sense. And, I guess in terms of people being honest about their financial issues, this is always something that I find a lot of clients always get a bit scared to talk about, or they feel ashamed about their financial position, right? Why do people hide their financial issues from out of everyone, the broker? And what happens when they finally open up?
Yeah, well, I think it's a lot about how we're brought up. Like, we're brought up, well, some people are to sort of hide what you earn and what your financial situation is, and people are naturally a little bit uncomfortable talking about it. And I think, obviously, as a broker, you sort of need every bit of financial information about someone in order to do their loan. So at some point, we need to know about it. Being open and transparent is going to make that job a lot easier. And there's not going to be any, hidden things that happen down the line which then make it hard to get the finance to purchase the property. So just being open and transparent from ball one is so important, and it helps us to do our job, to be able to obviously help a client buy a property.
Oh, 100%.
So that would be a key to that is and that's where sort of the relationship is important, and someone being comfortable talking to me about their circumstances when it might be the first time we've ever had a meeting, and these days, as it is, a lot of it's on Zoom, and you're talking to someone on Zoom that you've just been referred to last week, sort of thing, and so they mightn't be comfortable in being forthcoming with their position, which is understandable, and so
that's fair.
That's why I think just having a bit of rapport and relationship there for some people is really important. There's others, don't get me wrong, which are like, I earn this, we've got this, bang, bang, bang.
Yeah, here's my life. Get it done.
Yeah.
And it's like, and I think a lot of people probably don't realise is that you're there to help them with those financial matters that to them look like these big scary problems, but oftentimes to a broker or finance person, it's like, it's not a big deal.
Yeah, don't worry about it.
It's like, I know you said you got a credit card and you haven't done this. That's cool.
Yeah.
This is how we're going to fix that.
Yeah. Oh, and had that literally this morning before I came in here.
Right.
Like, we're doing a loan for a client, we're about to spit it off to the bank, and she's like, what about the credit card? Do I need to close it to get the loan? I'm like, no, it's fine. Like, you can keep it open. We've run the servicing, the borrowing that you need can be done based on your circumstances, so that's fine. So you're right. So one thing that someone worries about mightn't necessarily be an issue.
Yeah.
And probably half the time it's not.
Yeah,
Or if it is an issue, it's something that can be easily changed and easily remedied.
Oh, no, it makes sense. And I want to put this this conversation now into real world context, right? Because we've got a segment that's called the Reddit Real Talk. And what we have is our listeners, and this is a shout out to you guys. Thank you for sending these in every day. Every week we get an inbox of different Reddit posts that either you've posted yourself or you've found and you want us to unpack it on the air with a different professional every time. So I've pulled some from last week that we got, and I'd love to run these scenarios past you. So in this segment, how it works, we get given the horror stories, the good, the bad, the ugly, and today we're going to do the I want to do a red flag or reset. So my question to you is going to be, based on this scenario, do you think it's a red flag or do you think it's a reset? So reset being that they just need to shift their mindset, do a different approach, or a red flag that, no, that just sounds fucked up. Stop doing what you're doing.
Fucked up.
So, hey, look, it's the No BS podcast. I can swear on it. Now, these are real posts, real people. I'm going to read them out. Jacob's going to tell us whether it's a total disaster or just a mindset that needs a reset. Ready to get into it?
Yeah, let's go.
All right, this first one. So this person says, do we wait? Fear of timing. We're a young couple, one child, $200K combined income, looking at a $900,000 house and land package. Technically affordable, but a $5,200 mortgage feels huge. Should we wait and hope for a market collapse in Queensland or dive in? Red flag or reset?
Reset. Reset's the good one, yeah?
Yeah.
Red flag sounds bad. I think reset, like the reality is that waiting for a crash, I think was the description there.
Yeah.
It's tough to predict, isn't it? And no one knows when a crash is going to happen.
No.
But we know they will. You know, you look at the history of real estate in this country, there's definitely been peaks and troughs. So timing, the old saying, timing the market versus timing the market, it's cliche, but it rings true. So I think if you're thinking about buying and you can afford it and it makes sense now, well, then you should do it, because if you wait for the crash that doesn't come, you look at Queensland, I think it was the state. It's gone through the roof over a number of years and continues to. So who knows when that will change, and even if it will in the next foreseeable. So I think, definite reset. You look at the last 150 years of property in this country, it's gone up by over 6% year on year on year. And there's ebbs and flows, but the reality is it's just gone one way. So
yeah, so it's
I
only
would reset, and if you can afford it now, it probably makes sense. Obviously, with the strategy behind that conversation around what is your plan for the next 2 or 3 years?
True.
Is there family planning? Are you in the right area? What is happening with your incomes, etc., so that you can sort of build a picture and a strategy for what they will do over the next 4 or 5 years.
Yeah, that makes complete sense. I love it. And then this next one says hidden costs and budget shock, financial reality. And they've said, what other costs should I expect besides property and stamp duty? I keep hearing people say they spent tens of thousands more than planned. Red flag or reset?
That's probably a bit of a red flag if you don't know about what costs are associated to a buy.
Yeah.
I understand if it's at the start of the process, can you talk us through what expected costs we'll have? And we sort of do that when we run numbers around this is what you can expect. So, conveyancing one is
it's
particularly with respect, a lot of first-time buyers sort of just don't even know about because you don't know what you don't know. And that's a cost that you always have to pay when you're buying property. Between $1,000 and $2,000. There's mortgage and transfer costs, which people don't often factor in as well. There might be a settlement cost with the bank, which they mightn't factor in. Building and pest, if they're going to do that, that's $600, $700, $800 depending on the property, which they mightn't factor in. Stamp duty sometimes does get missed. If you're going over certain caps, and then you do have to pay it as a first-home buyer, obviously, if you're over those. So there are a significant amount that sort of get added on, which people don't think about. And when we run our numbers, we sort of give guidance around that and what you can expect to pay for those costs. But it's definitely important to have a clear picture on how how it is and what they look like.
Yeah, I think that's a big one, right? Because being a red flag, I would totally agree, because your broker should be running you through that.
Yeah, correct.
And you should know upfront. You shouldn't be in this position now where you're like, oh, what other cost should I expect? It's like, where's the person that should be telling you for your situation exactly what you're going to be spending out of pocket?
I sort of get it sometimes where, because there's so much going on if you're buying your first property, you're talking to this person, that person, the agent, the broker, the conveyancer, still trying to find the property and still going to your job. So I can get how sometimes that gets missed. Like, we have it in our documentation around expected costs, but sometimes clients will skim over that, or because they signed it, 6 weeks ago or however many weeks ago, they've forgotten about that, which I understand. So that's why, once again, like preparing, prior to the day of settlement, getting understanding how much you're going to need to pay and transferring into the relevant accounts, etc., to make sure you're good.
No, makes sense. And I like this next one, right? I love it. This Redditor says, explain buying to me like I'm 5. I'm overwhelmed and clueless. I have no idea how the home buying process even works. Can someone explain it to me like I'm 5? Is this a red flag or a reset?
That's probably a red flag. Is it?
It's a hard one, right? And I put it there for a purpose. Unpack it. What makes you think?
I'm 5. What if they're only 10 though?
No,
then that's okay.
Well, look, I think their expectation is they want it explained to them in such simple terms that if you were going to say, well, when you want a house to live in, it's like, how far down do we go in the explanation?
I think, do you know what? Just a bit of an aside there, but I had a client come to me, try to buy a property, and I was like, yep, all good, the numbers stack up, and then found out that he was 17.
Oh, shit.
And so he can't buy a property. And so he was ready to go, had the right amount, had found the property, spoken to the agent, done all that. And then I was like, when's your birthday? He's like, whatever. And so we had to wait another month
till he was 18
before he could actually purchase the property.
God, what did that kid do?
What a gun. Yeah, how good. Awesome.
How did he save so much?
Just worked hard. Left school, before year 12.
Yeah.
Got a job, on the tools sort of thing, and just grafted away, working all the time, 6 days, 7 days a week.
Far out. Like, see, this is where I always, every time I hear the headline, oh, it's the hardest it's ever been to buy a house in your 30s because wages, because savings and job and all of that. No, I get that. I'm not discounting it. But where I fundamentally always disagree is you can buy something, you have savings, maybe you're not buying next to mum and dad's because they bought there 50 years ago when it was cheap and now it's a $1 million market. Now your expectation has to shift.
Yeah, correct.
But it's these young kids who, just grab the opportunity exactly where they need to and go, no, stuff it, I'll leave, I'll work, and I'll just now want to buy a house.
Yeah.
Like, good on him. That's such an inspiration, I think, to young people.
Oh, big time, yeah. Amazing story. And have many like that, not as early as that, but early 20s trying to buy a property and you think, good on you, like tap on the shoulder, and you can't wait to see where they are in 30 years' time, like how well they will do based on, that sort of attitude at a young age.
100%. And I guess this comes back to this question, right? Like that 17-year-old, how much did you have to explain home buying to him versus what he already came to the table with?
Yeah. So we normally just start from the start for someone who has got no idea. And that's why I sort of mentioned about being chameleonic at the start around you need to change your approach. So if it's a first-home buyer who has no idea versus a seasoned 55-year-old investor buying their an SMSF property, whatever it is. So we just go through the whole process. So from start to finish, how does it look? What does a pre-approval look like? The documentation collection to get to that point. And then when you go to find a property, what do? You tell us about a property so that we make sure it's okay for the bank in terms of size and location and whatnot. And then once you secure it, how does that work? Often I'll be advising around what they do with the contract, and obviously there's a real estate agent at the end of it, and they'll often ask, what do I do now? I'm like, send me the contract and we can start to get it all moving. And then the loan documentation, the onboarding to whatever bank it is, the setting up of all of the apps, the online banking, whatever it may be. So sort of go through the whole suite. And what I always say to them, if they are like this person with respectfully not a lot of education, is you'll have a million questions, but you won't have them now. Like, as in, we're having our first meeting, this is the high level, absorb this information, send us back what we need, we'll get the ball rolling, so to speak. But you're going to have a million questions throughout the process, and it's more so telling them that that's okay. We'll answer them as they come, because ultimately you're going to have so many that crop up at a different time other than now.
Well, it's true, right? Because you're not going to go in with all the intelligent questions from day one. You don't know yet.
No, correct.
So,
and that's probably sort of how we play it a little bit. It's not bombard them with, a stack of information at the start or, a really long list of emails of the step-by-step, because most people won't benefit from that. No. It'll be the phone call, the text, the email. How does this work? What about that? And then we sort of go through it step by step.
Yeah.
But once again, if someone, I get a sense of if they're like, can you follow me up in an email just around X, Y, Z? Of course. And then, you go into the detail around how it may look.
Makes sense. And I think for that one, I would agree with red flag, because maybe, number one, going to Reddit for that question might be a bit rough.
Yeah, correct.
You don't know what you're going to get, if it's correct or not. But starting with a broker or starting with just a finance professional, someone who just is in the game that can say, cool, this is how it works.
Yeah, that's always first port of call. You want to buy a property, speak to a broker, obviously is the number one starting point.
Yep.
Because for most people, without the finance, you can't buy a property.
But it's even for us as buyers advocates. Like, I've had clients that come to me first because they've been referred, and I'm like, that's cool, have you done your finance yet? And they're like, no. And I'm like, okay, I'm going to put you in touch with someone. Have you got someone?
Yeah.
No. I said, you need to start there.
Yeah.
Go through that. When you're ready there, I'll help you out.
Yeah, but you can't.
Because I can't move with you.
Buy a property if you don't have a budget.
No, it's like I can't start looking because I have no idea what we're buying and where we're buying. So it makes sense. I think a little bit of a red flag. I think, look, buyers aren't stupid. There's no stupid questions, right? It's a fair question. The system probably isn't set up to give you that education or that background from school level. We don't educate you at all. And you kind of find this out as you go, whether mum and dad talk about it. And if you don't have parents who buy property and that's never been in your wheelhouse or growing up, you've always rented, you're not going to have this knowledge or question.
And I think that's why maybe it's not a red flag. It's a bit of somewhere in between.
Yeah, it is.
Because that individual, they may, as you said, have no experience. No one they know has bought a property.
Yeah.
So there's no real
guidance
conversation, guidance to help them out. And you're right, none of this is in year 12 maths or finance or whatever it is there?
Oh, I'm so glad I learnt Pythagoras theorem, right? Square root of pi. Like, I use that every day.
You just never use it again.
No, and I'm sure there's professions out there, really specific ones, that information's relevant. But for probably, I would say, about 70% of jobs that are common, you're not using Pythagoras theorem.
I wouldn't know where to start with that.
No, neither would I. And I learnt about it, but I couldn't tell you one thing about it. But I reckon if I learnt about property in high school, I would have carried one or two things with me.
Yeah, for sure. That. Well, it's life lessons, isn't it?
That's right. Because it's like, why don't we go through bills and maths and that kind of maths? It's tell me how to run my finances in a house.
Yeah, correct. Yeah, relate it to something that will be a real life scenario.
Correct. It's like, once you make it real life, now I'll pay attention because it's interesting. But when you say, Pythagoras was this dude who came up with this equation, why? Yeah. I don't like him. I don't want to know.
Mr. Damasi up on the blackboard.
Exactly.
Not blackboards anymore, whiteboards. Probably not even whiteboards.
No, they're electronic whiteboards that display shit. It's all sci-fi. Now,
but I didn't. That wasn't for me. I was technology, and we were using laptops when I was at school as well.
Oh no, we were
because I'm young.
Oh no, I was going to say, hang on. I went to school. I finished school in 2010.
Yeah.
So am I older than you?
No.
Oh, okay, cool. So we're similar.
Well, yes, we are. I finished school in 2020. What 2006?
Oh, yeah, no, we would have been in the same time at school.
They just installed, when I was going into high school, they just installed the smart projectors.
Smart projectors.
Fancy.
Yeah.
No, I didn't cop any of that. We still in year 7, I was still handing in my assignments on floppy disk.
That's cool.
Yeah, I know, floppy disk.
That's real cool. We were burning CDs and that was like high tech and
oh no!
I had a mate who had whatever the system was and he'd sell them for $5.
No, I was going to say I got into the wheeling and dealing way too early. I I don't know if I should say it on the air. Maybe I'll tell you after. But we did something similar. I was in grade 6, and one family member had the bright idea that we'd go to Caribbean Market, get the DVDs, the early releases, burn a shitload and sell them at school. Man, I made a killing every week.
Yeah, you dominated.
Yeah, and we kept it from my mum. And
Nothing else?
yeah, now mum knows, right? But she found out because I had a wad of $5 and $10 notes in my pocket, and I left them in my zip pants in my trackies from school. She was doing the washing, and she goes, "Where did this money come from? Why have you got this?" There was like easily $100 worth of $5 and $10 notes.
What's the moral of the story?
You got to sell.
Do your own washing.
Man, I was 12. I'm not doing my own washing.
Also, don't keep your money in your pants when you're about to go for washing. Just hide
Yeah.
that shit.
That's
Correct.
it.
Stash your cash.
Stash your cash. All right, I'm going to... Yeah,
And also, maybe that's how 17-year-old got the money to buy property, just
wheeling and
burning
dealing.
Blu-ray DVDs.
It's on washing.
Yeah.
Correct. Yeah.
Did his own washing, didn't get caught. Can buy a house now. See where I could have been, Mum? I do digress. So I've got one last one for you. This is, says here, a sad tale of housing is how this person titled it. Frustration and regret. 4.5 years ago, my friend bought in Greensborough for $620,000. Great house. Today, with the same money, I can only afford a shoebox on the fringe. How did this happen? Is this a red flag or a reset?
It happened by just economic growth and inflation and printing money and the real estate market as a whole. Like, it'd be interesting to know how many years ago that was 620 Greensborough. But, you know, the real estate market, it doubles, you know, every 10, 12 years, whatever it is on average. And so if that was 4 or 5 years ago, yeah, it is completely changed. So that's why, once again, you know, time in the market is the key.
Yeah.
If you can get in, get in. But also the whole shoebox thing, like, I think people, you know, you look at growth in properties and obviously the value traditionally is in the land.
Yeah.
If you look at most of the rest of the world, you know, places like Europe, people are happy to live, you know, in apartments in inner city areas because they're close to what they want to be near. And a lot of those decisions are important as well. It's like you're making a purchase sometimes for a lifestyle decision versus for growth and, you know, wealth creation. So understanding that's important as well, I think.
I think so. Like, and would you call that a red flag or a reset for this person?
I would call that a reset of your thinking around how it all works, and that's it.
I like it. And, you know, every single one of these people could have been in a home by now, in my opinion, if they just had the right plan and maybe the right advice early. So, Jacob, you've seen this play out in real life with clients. You've told us about some of those experiences today. So people who come in anxious and convinced that they can't buy, but they've walked out homeowners, right? Let's talk about a few of those stories. You've mentioned a couple, but is there one in particular that stands out? So have you had someone wait too long and regret it?
I had many circumstances where they've waited too long. I had a client, like, it would have been, say, 2 years ago, they were looking to buy a property up in Queensland. Didn't buy it. It was sort of 450 around that mark, like on the lower end. Didn't buy it, and then had another client buy, same suburb, similar sort of property, price point, etc. And then we just did a re-evaluation on it maybe 6 weeks ago or whatever, and that came in at like 610, 620.
Shit.
And so, you know, 150K growth in 2 years.
Crazy.
And as a percentage, you know, significant. So there was a little bit of regret there in terms of actually making that purchase, you know, and conversely on the other side, the clients that did buy, you know, we're on the phone to them maybe a couple of weeks ago around them making their next move now because they're drawing the equity out of that property to use for the deposit on the next one and ready to go. And so heaps of stories like that.
Yeah.
All the time. And often, you know, it might be, oh, we could have bought that one. Like, we missed it at auction. It was within our budget. We just, you know, whatever, we didn't buy it. And then all of a sudden the market gets away from you, or that right property doesn't come up again. So,
Oh, it's tough.
You know, property regret, it's a thing.
Oh, it's a massive thing. And I guess, what's your favourite turnaround story, right, where someone's walked in anxious and left a homeowner?
Yeah, once again, plenty of those. Had one a little while ago, like a young first home buyer. She probably just wasn't sure that she could do it.
Yeah.
And there was, a fair amount of anxiety around the decision, the where to buy the property, the can she afford it. So there was, talking back before around like stepping someone out through the whole entire process. This was one of those examples where we did it, and it was going from, literally day dot through to the end of the process and going through her finances in terms of what she was paying with rent, what her outgoings were with her life and her car and
entertainment, all that stuff.
Entertainment, going on a holiday, whatever it is, and really, crunching the numbers to say, well, based on what you're doing now, you could actually do the same thing within a property. Obviously, you're giving up that deposit to get into that property, but ultimately your lifestyle's not going to change.
No.
And went through that, and, it settled and it's all smooth and just over the moon. Like so nervous, so worried through the whole process. Like, every time something would happen or the next step sort of commenced, she was like, what does this step mean? I'm like, oh, this is all part of it. Doing a valuation on the property is just part of the course, and every bank does it, and yada, yada, yada. And, myriad of questions, which is fine, and that's just a part of it. But getting to the end of it, she moved in like absolutely stoked.
No,
like
awesome.
so happy. And you're like, that's why you do it, and like that's why I love what I do. When you get that end result and someone's just over the moon, it's it's a great feeling.
Oh, it would be like euphoric, right? Because you've gone on such a journey with them, and it's like then you reflect on it, and even they would to go, fuck, I knew nothing when I came in. I was so stressed out.
Yeah,
and
now look at me,
And it's like, now I've got a home, now I've got something to actually look after and have a value.
Yeah.
That's a life-changing experience for everyone.
Yeah. Yeah, great.
Oh, that's awesome.
And that's like probably going back again, like to the story about becoming, self-employed and becoming a broker. That was the biggest change, was getting that. You feel the excitement from the clients.
Yeah.
Whereas when you're in the big bank, the ivory tower in the city sort of thing, you didn't get a sense of that. You didn't feel it, but now you really ride the bumps and obviously get the upsides of, the joy and happiness that clients get.
Yeah, 100%. And like you said, you're not seeing it from that corporate level, but then when you're on the ground, you're like, oh, this is actually real life impact that I'm having on this person's life.
It's great.
And they'll never forget that too. Right?
No.
And I think like stories like that are like a reminder that buying a home, like I was saying, isn't just about finding the right property, but it's about being prepared for everything that comes afterwards too, right? So you can save for a deposit, but those surprise costs after signing the contract catch so many people off guard too. So let's talk about the real cost of buying a home. We've already touched on this a little bit, but maybe just a summary, right? You talked about going through those hidden costs. So when you're going through this, I guess, broker fees is a big one that comes up because everyone goes, oh, brokers are free, they're paid by the bank. Yes, but they're also paid by you, but through the loan process. And those fees are generally talked about up front, right?
Yep.
So
it's all up front.
Yeah, and it's all up front. So what's one myth about brokers or fees that you'd kill off forever?
That the bank can do what brokers do.
Oh, yeah, okay, talk to me.
Like they just can't. And if you go, direct to a bank, CBA, Westpac, ANZ, whoever you bank with, they're only going to be able to provide CBA product and CBA services. Whereas if you go to a broker, we have 100 different lenders at your disposal in terms of who we can go to for whatever reasons there are. And we are bound by best interest.
Yep.
As we sort of spoke about that compliance piece, which the banks aren't. So we have to do what's in the best interest of the customer, which is, a big piece to probably the difference between going direct to the bank and obviously then going to a broker. And I think just that is that we have options and we have a team behind us basically trying to help you get the loan and get you into the property.
Yeah, and that I think that's a huge thing, right? It's like lending is one part of that, and like lending options, because often people have such specific scenarios. It's like I think I had one case last year where this lady, she was awesome, but she came to me so late in the game. So she'd sold her house, she had a month to find another property. She wanted help as an advocate, hadn't spoken to a broker.
Yeah.
I'm like, oh shit, what are we going to do? So I had a broker that was a good friend, and I said, can you help this lady out? Like, we need to kind of get her moving ASAP. Overnight, she got finance for her, but she had a disabled kid. She had another daughter that got diagnosed with cancer. She was the full, part-time carer and working one job, one income. And I'm like, Jesus. And it was such a niche policy that she found, because I knew she would have the lenders available.
Yeah.
And they found her something, and she got into a new house within a month.
Yeah.
I couldn't believe it that we did it, but it was stuff like that where I'm like, this is the options that you're not going to typically get through a bank, because the bank has their lending policy, and they're not bound by best interest, which for me is a huge thing, because that comes down to, yes, they have internal and corporate policies. Yes, they've got best practice. Whatever the best practice is defined by their company, that's what they're bound by. Whereas brokers are much more, no, this is regulation.
Yeah, correct.
You can get in big trouble if you're not doing it.
Yeah. And I think that's the point, like around that example.
Yeah.
The average customer wouldn't know where to go or even where to start to get the loan to purchase that property, whereas a broker will have all these lenders that you've heard of and many more that the average punter just hasn't heard of.
Yeah, because they look after those niche little
really niche,
scenarios.
really specific, non-bank lenders that service certain types of clients, self-employed specific types of banks, low doc, all of these options, which are plentiful now and, have become more and more and more over the years. So that's where the real value is. The stock standard within the goalpost sort of loan application, can go anywhere in theory, but it's when it gets a little bit, off the beaten path that sometimes it's more difficult and, the value of the broker really shines through.
No, spot on. Oh my God, Jacob, I can't believe how far we've come in this episode. Like, I could talk to you forever and probably pick your brain forever, but I won't. We're just going to have to get you back on the show. I think we've come to the end, but I'll ask you this final one. What's your no BS advice for these nervous home buyers?
Get some help. Literally get some help. And in a good way. We all need help in our lives.
Yeah.
You're making literally the biggest financial decision that you've ever made in your life. So why would you do that based on only what you know? Go to a professional that's going to help guide you. So you have your broker, you have a conveyancer. If there's an accountant or a financial planner involved, make sure you've got them helping you, because they do it all day, every day. So why wouldn't you lean on them to help you get what you need?
Spot on. I love that. And last question for you. Finish this sentence. If you tell your broker the truth, you'll ...
Get what you want.
Love it. It's true. So
get a property.
Get your goals, achieve your goals. So I love that so much. Look, it's such a grounded way to look at this, right? It drives home buyers in a direction that's not just financial, but it's goal orientated, it's future thinking and planning, and this is what someone like Jake can actually help you do on your journey. And if you like an honest approach, and also a helpful one, like you don't want to be told yes to everything, like yes, every idea you have is great. And I know there are some people out there that probably heard this episode and go, yeah, I don't agree with that, but it's like, is this the truth that you just needed to hear? So have an open mind, sit with those thoughts when you get that feedback, and think about those next moves before you step into property. Like, this journey is a big one. So, Jake, thank you so much for coming on the show and for sharing all your wisdom. I've really loved it.
Yeah, thanks for having me. It's been great.
Yeah, had fun?
Cheers.
Cheers, everyone. Now, what I love about this chat is that it proves buying your first home isn't just about numbers, it's about confidence, honesty, and having someone in your corner who will actually tell you the truth early enough to matter. So you'll find Jacob's details in the links below in the show notes. And don't forget, as I always say, it costs nothing to have a chat. Pick up the phone, have a conversation with Jake. His details are below or on the screen if you're watching right now. And get in touch. You'll just have an open discussion, and maybe it'll change your whole perspective or the whole plan you have for the rest of the year. So if this episode helped you rethink your own buying journey, make sure you like it, subscribe it, and share it with anyone that's sitting on the fence. I'm Jo Agresta, and this has been the No BS Real Estate Podcast. We'll see you next time. That's a wrap for this episode of the No BS Real Estate Podcast, powered by Abodey AI. If you found this conversation helpful, don't forget to subscribe, leave a review, and share this episode with someone who might need it. If you're looking for more guidance on your home buying journey, you can visit www.abodey.com.au for expert advice, property insights, and the tools you need to find the right home with confidence. If you're already on your journey, you can also download our app. Just search Abodey AI on the App Store or Google Play. Have any questions or want to connect, you can follow us on Instagram at abodey.com.au or send us a message. We'd love to hear from you. Thanks for tuning in, and we'll catch you in the next episode.